Hi there, I'm Dean Heskin, President and CEO of Swiss America. And for those of you tuned in, you are tuned into our podcast entitled The Secret War on Cash. And if you weren't already aware, there has been a war going on our cash. It's been going on for quite a while, but it seems as though it's accelerated quite a bit recently in different ways. And some of those ways we're going to talk about today as I have my co-host with me, Chris Agelastos. Chris, good morning.
Good morning. How are you doing?
Doing well, thank you very much. It's interesting that you and I were both out a little bit last week and not even related. We were both in Missouri, which is weird.
Yeah.
And then not related, we were both in Missouri, but we were near Branson, Missouri, like right next to each other for the most part.
Yeah.
There's
What are the odds of that, right?
well, they're 100% at this point, but I mean,
Now.
preemptively, it have been tough, but welcome back and glad to be
Yep.
back myself.
Thank you.
Let's get into some of our topics for today. Okay, in fact, we were
Yep.
talking about Warren Buffett a few podcasts ago, and really kind of wanted to highlight this or kind of discuss this today because, as we look at the election is now over, there's a lot of optimism as it pertains to the direction we've gone the last 4 years with the last administration and what might be on the horizon now with the new administration, with Trump being in.
Hmm.
And we look at what's going on here with Warren Buffett. In this first article, Berkshire Hathaway's cash fortress, which we know Buffett, and we've covered this, he's been selling off some pretty significant positions in stocks, Apple being one, Bank of America, several others. But his cash fortress is now topping $300 billion. Dollars. It's a lot of money. It's a lot of money. In fact, we just found out that his personal net worth is close to 150 billion. So that's twice his net worth, and he's worth a lot of money.
Yeah.
And interesting though as well, in addition to what he's doing in terms of selling off stock and amassing his cash, he's actually made a decision to freeze the buybacks of their own stock. And that's left a lot of people kind of wondering, what's going on here. So tell us what is this strategy, or do you have any idea what this strategy is that Warren Buffett is employing right now?
Well, it's hard to say for certain. Sometimes he's known for, not really mentioning his true intentions, or kind of saying one thing and throwing people off a little bit. Unlike Charlie Munger, who was, pretty much a straight shooter. But he sold significant portions of Apple and Bank of America. Those were two of the biggest holdings that he sold. And I think I want to say it was around 25%, if I read that correctly, of his Apple stake, and he has made great money there. And a couple of the things he mentioned is to take some of his profits now while capital gains taxes are relatively low. But he says flat out that he's worried about the large deficits that we have in this country, and neither candidate, which I think he's right, really addresses cutting spending. They Republicans and Democrats tend to spend a lot of money just on different things, different priorities, maybe. But neither one of them is operating with a balanced budget. So his take is that capital gain rates are going to have to increase at some point in the future here, just to plug the hole in the boat, which does make sense. But are there other motives here too? I mean, a lot of us have been saying that the stock market here in the U.S. is very oversold, and his freezing buybacks of his own stock certainly alludes to that. So I think there's a few things going on, and maybe a few more that we aren't even aware of. But it's definitely something to pay attention to.
Yeah, I totally agree. Well, and we've been talking about this. A lot of people are talking about how the stock market uh, arguably is overvalued,
Hmm.
and the expectation that there is going to be some kind of a pullback at some point hasn't really per se happened yet, and hopefully it doesn't. But yet you do have somebody like Buffett who, this is a he's pretty well let his position or his stance on this situation be known by his actions. And
Yeah.
one thing as you were talking there, Chris, I think is important to kind of note here is, does anyone know for sure if and when the market is going to correct itself? It's going to pull back. I mean, obviously, it goes every extreme. Some people say there's going to be a correction, a pullback. Some people say it's going to be a crisis or a collapse. But what is important to note is that these are the stocks we're talking about here, where he is received a ton of his cash position from. Apple, Bank of America, these are very strong, viable companies that produce a ton of revenue. Apple, they're still selling a lot of those phones out there. And so
Yeah,
when you talk about the vulnerability and perhaps the how delicate the market might be at this time, when you're talking about him getting rid of stocks like this, there are many other companies out there that aren't even close to as stable or secure or generating the type of revenue that you have with Apple and Bank of America. That if he's selling these, where does that leave the rest of them? I guess is what I'm getting at.
yeah,
And
great point.
that's related to this, and it's a pretty similar article. This next one I'd like to look at that CC will put up here. It takes a look at well, let's look at the title. Even Warren Buffett thinks his stock is too expensive.
Yeah.
And I referenced this in the earlier article, and it talks a little bit more extensively here about this, that he's not buying his stock back. He cites the fact that he does think it's too expensive, and not until it hits. He's not saying it's off the table to buy it back, but what he's saying is that until it hits a certain price threshold where he believes there's value, then that's when he would start to buy it back. So what that looks like and
Yeah.
what that price is remains to be seen, certainly. But one of the in this second article here is one of the people that they're quoting talks about how, why should I buy Buffett's stock if he thinks it's too expensive?
Right.
And it's a good point, but I, I don't know this, Chris. That's why I'm going to ask you. I could see as I was, I can see kind of two sides of this argument where, you know, because again, it's just too expensive and he doesn't want to buy it, or
Mhm.
maybe is he wanting to just sit on as much? See, because if he buys the stock back, then that 300 plus billion that they're sitting on, that's where that money goes. And is he so much anticipating that there's going to be a market pullback that he wants a war chest or a treasure chest of cash so that once the value, not just with his stock or just talk about his stock, but all stocks out there, when it pulls back, is he wanting that money on the sideline so he can start buying in? I mean, what are your thoughts there?
Yeah, I think, well, perhaps both, but I don't think that buying his own stock back would hurt his cash position too much. And what I mean by that is that, he's ending here a 6 year streak of buying back his company stock. So he's been regularly buying it back for the last 6 years to the tune of usually around $2 billion or so a quarter. So while that is a lot of money, that's not going to put a major dent in
Right.
his cash buildup here. So he
It's
could
a
buy
very good
it
point.
back and
Right.
still have enough money left to buy other stocks if he wanted. But so I think that really then points to the real issue, which he simply thinks his own stock right now is not a good deal,
Right.
and he's very much about buying it at the right time. So he feels like he does not want to buy it back until it's trading at a point where it's kind of a bargain. He feels like it was doing that the last 6 years, and now it is not. So I think this is a pretty big indicator, and you're right. If somebody isn't willing to buy their own product, if you will, how tempted are you to buy that product from them? And I think this is definitely, sending a going to send a big signal for the people that are paying attention. And I think he's saying that he's very cautious about where the market is, and that he's going to sit in cash and wait until the market corrects, or at least some very tempting stocks correct. Even if it isn't a full on market meltdown, he's bargain shopping, and right now he doesn't see any bargains.
Right. Well, and you wonder if he has, related to this, any kind of timeline, time frame in mind in terms of, how long he wants to sit on cash or what he's watching. I mean, like we were talking about a little bit ago, I don't know what kind of timeline he could have. He's 94 years old, so I think he's in good
Right.
health. But
Yeah,
that timeline's got to be a little shorter now than it was 10 years ago. That's for sure. So
for sure.
definitely something we'll keep our eye on as we kind of round
Yeah.
out or kind of end up the year here in 2024. And certainly a lot of expectation, a lot of optimism, I believe, with people in terms of what we might see starting in 2025 and moving on with, again, a new administration that may be a little more um, market and investment centric or focused. So interesting thing to talk about, and it will be something interesting to watch. So thank you for all that, Chris. And for those of you tuning in, if you have not subscribed to our podcast, please do so we can talk to you more about this in the future. And if you'd like some information about what's been happening in the markets or what's been going on with the secret war on your cash, you can visit us online at www.swissamerica.com, or feel free and contact us at 1-800-289-2646. We'd love to get you off some information. It's completely complimentary. It's free. There's no charge for it. So no reason to not do it. No obligation as well. So thank you, Chris. Look forward to having you again soon, and have a great rest of your day.
Thanks a lot. Take care.